Hello, everyone. Welcome. It's Brian Caprice, and welcome to this week's Nadex Weekly Charts and Analysis. It is officially March 1st. I feel like we are rolling through. March is always a big month. March is where we start talking about taxes coming in, and it's like, wow, April 15th is right around the corner. Man, it's already flying through. I feel like we literally just turned the 2022, and now it's March 1st. Amazing. Um, quite a bit has happened market-wise, movement-wise, since our earlier discussion this morning. Some headlines and some headlines are running roughshod in the oil markets in particular. It was kind of one of those things that everybody knew was out there, and then somebody talked about it today, and things got even crazier. And it's only going to probably get worse. If it wasn't already out there before, it definitely is now. So we'll dive into what that is in a few seconds. Um, yeah, it's a very, very interesting one. For all the new people out there, welcome for joining us today. If you don't know who I am, you guys, a lot of you are returning each week, and every week we get more and more new people that are coming in. I am actually not a Nadex employee. I'm the president and CEO of Keep Trading Simple. I partner with Nadex and I do a bunch of different education for them as well as some analysis sessions. I also co-host a morning show every morning at 8:45 that we have on the Nadex YouTube page. My trading style is a little bit different than I guess kind of what the quote general public does. I'm not a huge indicator guy. I know how to use the indicators and I know what they're good and not good for, and I also know how to use them as traps. Basically, I'm a price action based trader. I'm more of an intraday slash swing. Long term stuff for me is more kind of on the wealth side of things, which is entirely different. Um, I started back in Y2K, right? 1999 is when I got started, actually. Learned stocks, traditional options, found currencies about 6 years in, fell in love with that market due to the leverage and kind of the global nature of it. Learned to trade futures, became a financial advisor, learned all about the bond arena and how important that was. And that was kind of like the missing link as far as, kind of a broader understanding of control. And then since that time, I spent some time traveling. I ended up getting remarried, I guess, and basically have expanded the children. Now I'm basically just home based. I teach traders how to read for on a full time read charts on a full time basis. And again, love doing this presentation. So if you're new here today, don't hesitate to ask questions. I'll actually give out my email address at the end of today's session. So if you guys have any questions about it, you're more than welcome to message me. The agenda for today. Or actually, before the agenda, I got to cover the Nadex risk disclaimer because we are talking about charts and risk and things like that. They require us to do this. The trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost of another transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility at your own risk. Past performance is not necessarily indicative of future results. None of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. As you guys know, that'll be changing at any moment. Again, they agreed to a deal at the end of last year. It will eventually become Crypto.com, not IG Group. That should be pretty exciting when it finally comes through. I'm excited. We're gonna have to have like a party or something on the channel or for one of these events. But I know it's coming, so we'll see there, and then we'll be changing the content slightly around as well, and kind of expanding what we talk about. So the agenda for today. Whoops, we're already jumping ahead there. The mouse is extra touchy today, I guess. We're gonna cover upcoming news events. So what I mean by upcoming news events is economic news releases. Okay, we'll go to the calendar. We'll talk about which ones matter the most right now. Unfortunately, with what we have going on right now with the Russian invasion, obviously those headlines, the policy statements, things like that those are kind of, for lack of a better word, trumping everything right now. If you guys don't know what trumping is, it has nothing to do with the president. It's actually a card game, and kind of it's a saying. I had somebody say they're like, when did Trump come? No, it had nothing to do with him. That just happens to be his last name. For all I know, he changed it to make it that. Anyway, after the news events, we'll cover the indices, then we'll break down forex, and then last but not least, cover commodities. I am actually going to mention commodities first because that's kind of controlling things right now. So I feel like we definitely need to talk about oil first and foremost, as really that's kind of I would say the global controller right now is probably oil. Okay, so with that said, let's just go right into it. There's nothing, really anything else to talk about. Um, on the 24-hour nature of things, again, currencies this morning were rather flat. We were seeing some consistent trends with the euro and the pound kind of being more to the downside. And again, we kind of they're kind of, I would say, riding a wave. They're high and then low. And we've gotten some headlines this morning that are kind of leading the euro. And again, you can see the euro pound. I mean, I mentioned they're both weak, but euro pound is down 27, showing that there's more pound strength. A lot of this is coming from this statement right here, and I showed this earlier, that the ECB rate hike bets for 2022 are put on ice just because of everything going on. I don't know. Like I said, I mean, it's kind of hard to figure out. It's like, I don't know. It feels like, Putin has one of those, like, 12 or 16 sided dice from like Dungeons and Dragons. It's like, okay, today we're going to say this and we're going to do this, right? Right now they've put it on hold. Putting it on hold doesn't necessarily stop the problems that we've had with inflation. Germany this morning, again, expected to be 5.1%. It's over double what the actual kind of mandate is. With It's one of those things. The only tool to curb inflation tends to be interest rate hikes. Um, with where we're at now, and again, what we're going to cover in oil in a second, it's only going to get worse. Energies was already driving inflation. It's going to get even higher now and could potentially make stuff even worse. So, yeah, this is kind of an interesting one. And again, I'm not an ECB president. I'm not on that board. I don't know how you can do this with inflation already running the way that it has. It's just one of those things that it's kind of, listen, the rest of the world is continuing forward. Inflation being as high as it is has to be, has to be controlled. Um, Again, the people that are most in need are the ones that are affected by inflation. And if you're just going to let it continue to move, God forbid that the economy, we have high inflation and the economy tanks all at the same time because of everything. Man, there's a lot of people that are going to be hurting. So I feel like it needs to get under control. So that's one of the things that we're seeing there that's leading the euro down today. And you can see right here, central bank's inflation trap heading to be a great escape or a great reset. There's going to be a lot of conversations about it going on right now. And then obviously with oil, this morning, oil, we've heard, Putin met with, I guess the Abu Dhabi prince. OPEC is basically saying they're likely going to stick with Wednesday's, at Wednesday's meeting, it's going to be business as usual. They're not going to change anything. They're not going to change their production. I didn't think that they would. Um, it didn't, again, this is the problem with, an organization like OPEC. Once you give them control, they're going to control it as best as they possibly can. They can use every excuse in the world not to increase it and lower the price of oil. And again, remember that Russia is a big part of OPEC Plus in that discussion. So, they're kind of at odds with the rest of the world right now. So, yeah, yeah. I mean, here's another one right here. They discussed it with the Abu Dhabi Crown Prince. They're going to coordinate global. And again, Abu Dhabi and Putin are the ones that are coordinating global energy stability. Sounds like a great idea, right? But that's what we're dealing with. And because of it, again, you can see there's not really a lot of, the non kind of, I don't want to say non-affected, but even the dollar CAD, it's up 52, and we know what's going on right now. This is really kind of flight to security with the dollar, and then again, local, you know, more local populations, more local countries are the ones that are being affected. And one of the other headlines I think we need to talk about as well is the Nord 2 steam pipeline. The owner is talking about going insolvent, basically saying, listen, at this point, with sanctions and everything else going on, we've built this entire thing. Germany's not going to approve it. Bad news kind of for the natural gas market, but again, even kind of got to say, okay, well, if they're not going to use the natural gas where that was meant to replace their nuclear as well as coal, are they going to have to go backwards? The plan was they were going to use this pipeline. So if again, the pipeline business is, I joked about it earlier, the pipeline business has not been great. So that's going to be a hard one. And then because of it, here's the oil chart. Earlier today when we talked, we were talking right about here. And I mentioned finding a top in oil. And I still think we need to find a top in oil. There's a lot of speeches about people going to crush this. And I mentioned we got to look for some basing. We got to look for failures to go higher. We don't have any failure to go higher yet. This is having no problem going higher. We're actually up right now at 106.44. Absolutely insane that it's this high. And here would be why. You know, this is something you CNN posted. I don't need Bombas. I don't need any socks. Thanks, buddy. basically talking about all bets are off if Putin slashes the West's oil supply. And it hadn't really been talked about yet, but now they're talking about, wow, we're at the stage now where what happens if he decides to start cutting oil off, lowers his production? We need to have it, right? We're addicted. We need that fix, right? We need this at the pumps. It's a pretty interesting article. You guys can find it. It's on Forex Factory or just go to CNN. Just talk about, oil, UK and Russian. It's not that hard to do. But Russia being the number two world's producer, right? If they intentionally started to hold it back, they could really mess with some different areas, right? When you look at the top crude producers, again, this is a little bit of education today. The United States produces the most, right? We produce the most, followed closely behind by Russia. They're really not that far behind at 9.7 million barrels. And then Saudi Arabia, right? And then we drop all the way down and you see Canada, Iraq, China, Brazil, UAE, Iran, Kuwait. Again, Iran, we talked about before, if we stuck sanctions on Russia, but Iran's coming online. Yeah, but the 2.5 doesn't equal the 9.7. And in reality, Iraq, Saudi Arabia, Iran, UAE, Kuwait, there are questions about how much supply that they actually have left and how long they could continue these outputs. The official response to these is, when they look at it of how much supply they have, they're forecasting. They're forecasting the same thing they did 30 years ago. We've been taking oil out of it for 30 years. So, there's always a reason. Now, question is the gasoline prices go much higher. They're saying right now the national average is 3.61. I know it's over $6 in California. It's up 8 cents in a week. And again, one thing to point out is the United States consumes very little Russian oil, right? But it says, oil imports from Russia stood at just 90,000 barrels a day in December. Still, this is still an interconnected and global market. Supply shocks in one part of the world can have impacts everywhere, and Russia is the wild card. And this is what it boils back down to, just so everybody understands. How much crude oil does the United States import from Russia? It's almost nothing. Nothing. 90,000 barrels. You can see it's very, very tiny. I mean, we're getting more from Ghana, Nigeria, Ecuador, Colombia, even Iraq, right? We're barely getting anything. So it doesn't really affect us directly. An interesting thing is one of the decisions that really kind of started the energy spike was the pipeline announcement that, hey, we're going to cancel the XL pipeline. This is how important that pipeline actually was. Look to see how much Canada produces a year. 4.3 million, 4.3 million, right? Right? Per day. Um, per year. Uh, Canada, they ship almost all of it to the United States, and we just made that process even harder and more difficult. So again, talking about the price shocks, and again, there are three phases put in that pipeline, but again, this is a big deal. Okay, so we're taking everything, everything that Canada can have. If Russia starts using this as a weapon now, it can be very, very bad. Right, it could really jack this. And remember, it says the White House has warned Putin not to weaponize oil, of course, because we need that resource. We also advised them not to go into the Ukraine, and they did. And it says right here, even if Russia cut supply 10 to 20%, the price response would compensate Russia for the loss of supply. Right? So this is important to understand here. We can tell them, don't you dare do it. But what are we going to do? Are we going to send tanks into Russia because they're cutting supply and then we become the aggressor? No. So we can say what we want. This is where, that pipeline and getting oil easier would have made them even more irrelevant. And again, if Russia has no other weapons, it's nuclear weapons, or they start cutting supply, this can start crashing economies because the price of shipping things becomes so expensive. So they don't need to go to the nuclear option. They can go to the oil option. Again, and look, if Putin decides to weaponize his energy supplies, it would be a major mistake. Well, we've already tried to basically destroy their economy and send it into nothing. What else are we going to do at this point, right? And again, it just shows you our reliance upon oil and how important of a supply oil is. So, look at this. If, in the long term, right? If we weaponize it, we're going to put even more. Like we're already. I mean, we've already put maximum sanctions. So very, very, again, very interesting thing. He doesn't need to, Again, we're not going to launch nuclear weapons against Putin because he slashes oil supply, but this is a very, very serious issue. And because of it, bam, we got 106 oil. All right. An important thing in here as well is Goldman Sachs. JP Morgan has warned that oil would spike to $150 a barrel in the event that Russia exports are cut in half. That would translate to a roughly 41% increase in the recent high from nearly 106, and it is 106 now. So this is what's happening, right? And now that it's out there, now that it's public knowledge, if Putin wasn't thinking about it before, guess what he's thinking about right now? You're going to try to destroy our country. This is the type of aggressive nature. Well, guess what we're going to do? Yeah, that's kind of the world we're in. It's it's step for step. These are the type of problems that we're going to have going forward. So, yeah, it should be a fun day. With that, let's go in and kind of check everything else out here. And I'm going to start off with the VIX. The VIX is up 12%. It's obviously up much more than it needs to be. Very serious. I mean, again, statements out there. You can see we started at 30, we're up to 33. I mean, remember the days we were at 12? I mean, it wasn't so long ago, right? I mean, you can see we had a spike here, but look at this. We had all this back here. We were down in like the 16 range, right? In January, we started off the year at 16, and look how fast this has escalated. And now we're kind of, we're not at a peak, right? But we're starting to creep up there, and the headlines that we're getting is that there's a 40-mile iron column going towards Ukraine's capital city. So, um, yeah, VIX is up 12.4%. Typically, when we've seen these major spikes out, we see, again, large gap, and then we see a pullback, right? Large gap, we see a pullback. We don't have the gap right here, but we are seeing this rally quite higher. Now, the question is tomorrow, do we have this type of a gap in the VIX because something major happened today, or do we start to see the rollover? So we need to see signs, and typically there's going to be a high, and then these failure to go higher, right? A high, failure to go higher, right? A high. This one went a little bit higher, but then it had a failure and started to crank back down again. So we'll see. We need kind of one of these days where we have an explosion in the market. The dollar, on the other hand, the dollar is also rallying, and this could be for a number of different reasons. Again, the dollar tends to be a little bit flight to safety. It's nice that we are now flexing the muscles. It's like, hey, listen, we told you not to, go after Ukraine, but don't you dare touch our oil, right? It's going back up again. It's getting back on the high side. We know we had sellers back in this the 97 range. So again, this is basically people starting to put it in there again. If some of this also has to do with Europe starting to hold back raising their interest rates. The United States is going to become a lot more attractive when we are kind of one of the only ones that are raising. I said I would mention the events this week. When we talk about raising, I was kind of trying to save that. Today, we're going to get some GDP data from Australia. We know that Australia is getting ready to raise as well. This is giving them a big boost. So they're going to be looking to raise. Tomorrow, the CAD is expected to raise. Okay, that should, again, this dollar CAD. You say, wait a second, why is the dollar CAD green? Oil is going insane. That's a lot of strength. That's a lot of money for the CAD. Yes, but they're getting ready to raise interest rates. So it's setting it up more for a short tomorrow, right? A spike tonight, finding that top, and then again, expecting that raise where people are going to be driving money towards the CAD tomorrow. So we should see that. We do have OPEC plus, so again, that's going to give us some kind of indication of what's happening. We have the non-farm numbers tomorrow, and again, big swing. It was a minus 300,000 last time, a positive 300 this time. That's a big draw. And then again, crude oil. We don't have the forecast. We know what the previous was. The previous was a surplus. We've actually had a surplus the last two. That could also go into this, although again, it's kind of more the future of things, not necessarily what's happening right now that we need to worry about. So again, tomorrow could be a very interesting day, particularly for the dollar CAD. Seeing oil go up, and again, if the VIX rolls, that should kind of take some of that pressure off. Thursday, we have the unemployment claims number. Again, those are continuing to get lower. Even more reason why we have to raise interest rates. We have Powell testifying, and Powell is testifying for the semi-annual monetary policy report. Um, and again, it's before the Senate Banking Committee. You say, okay, why does that matter? The reason why it matters is we are at 40-year highs for inflation right now. And the last report we got, we talked about inflation is broadening into other sectors. It's only getting worse, particularly in things like oil. As far as inflation goes, it's kind of out of control right now. We are in 2022. We are kind of at that midterm election time frame. You see everybody right now thumping their chest saying, I knew we should protect Ukraine. I'll tell you right now, he's going to get railed about why we've done absolutely nothing to curb inflation. Why are we going to raise interest rates at the same time still having quantitative easing on, right? Why are we still doing these bond purchases? Yet we're at 40-year highs, okay? Should be pretty interesting. Should be some fireworks. Be very, very cautious. It is right around that 10 to 10:30 time frame. So depending on what the morning movement looks like, there could be some amazing opportunity at that 10:30 reversal when Powell starts speaking, particularly when he starts getting railed about how we have had so much inaction and allowed interest rates to get this bad. Okay. Um, ISM services coming in right afterwards, but at the same time, because it is kind of linked in, I don't think that ISM is going to be kind of as a big mover this time as it could have been. I do think because it's an annual and it's a Senate committee, and everybody on the Senate's going to be like, "See, I stood up to Powell. I asked that difficult question. I got him with that 2 point zinger." Right. I think it's going to be a big thing to watch out for. And then Friday, again, because we're in a new month, we have our non-farm employment change. So not like we already don't have enough stuff going on, right? We have non-farm this week also. And the unemployment rate is expected to drop down a little bit. Now, this one has been kind of, it did go up last time, and they're expecting that there'll be an adjustment and it'll come back down. The non-farm number, they're going to say, it's holding it, about 400,000. And it was, 467 last time. Nice difference last time. But again, with the 3.9 and the 4.7, it goes back to the absolutely we need to do the 0.25. And the reality is going to be it's going to it's definitely to be it's like almost it's like I can't say 100% guaranteed because they always do weird things. It's pretty much guaranteed. I'm going to say that it's pretty much guaranteed 99.9% it's a 0.25. The last couple polls we've seen, it was as high as 80% that they were going to do a point 0.5 raise. And then the Ukrainian situation came up, and it was like, well, maybe we should just hold back, and maybe instead of going heavy in the front, we'll just do 9 raises in a row. Which again, if you need 9 raises in a row, or I guess it wasn't 9. Sorry, I'm exaggerating a little bit. It was 7. That means that we are carrying inflation 7 times in a row. That means inflation is going to go for another year and a half. It'll be a complete swing in politics this fall if that's the case, if they don't take action. So they need to go heavy up front to start slowing it down. Because they're saying if they need 7 raises, they're saying that we need between what? A point and a half and 2 points, right? So even a 0.5 won't stop inflation. It'll put a temporary kind of, I say, pothole in it, right? So that's kind of what we're looking for, particularly if these non-farm numbers are good. So look for some amazing movement, and then again in the Saturday nothing, Sunday nothing, and then Monday even of next week we don't have anything, and even Tuesday we don't really start hitting things again until the 9th, and that's where we have the monetary policy for everybody else kicking in. So kind of an action-packed week as far as that's concerned. So let's start rolling through, and we'll go with the indices in particular. So earlier today we mentioned that we had a turning point at 43.83. You can see it's already out. You're done at this point. Right inside of that position overnight. You guys can see that the 1 to 3 was sitting right about there, and actually we got taken out before the open. The open 9:30 candle came back up. Let me drop it to a 15 because that's where the analysis needs to be done for the lower time frames. You can see it got close up to another entry, and it just missed it by a little tiny bit. But overall, I think that with everything going on now, the threat of going after oil and weaponizing oil, which I mean, to be 100% transparent, if I had my choice between Putin, being unstable and nuclearizing and putting his nuclear force on high alert and having one finger over the button, or him making the price of oil go higher, I'm all about recycling. I'll be the first guy out there to go ask McDonald's for their used oil, and I'll be the guy driving down the street with the the oil car that smells like French fries when I'm driving past. I'd much rather him start cutting oil supply and force other fuel alternatives, which would not be a bad thing. But again, downside, not really the best news we've gotten today. We talked about earlier Monday and even last week talking about 42, 43 being the target to the downside. Right now, we're kind of hitting kind of this middle ground area. We've had some buyers in there in the past, and again, we're at a slow time right now, being 12:30. But for the most part, it was a straight down today. I'd say this, right now, there's really nothing positive. We're just seeing more and more negative news, particularly with the two big, Ukrainian cities about to be taken. So, I feel like it's taking them longer, but they're on basically the outskirts of both towns. And yep, it's, urban fighting is a very much different experience. NQ. NQ did the same exact thing. Kind of that, whoops, earlier this morning, obviously, this here's your 10:30 reversal. This one had a weird open. So the 9:30 candles right here, it spiked up and kind of spiked down, and then spiked up and spiked down, and then spiked up and then spiked down, and then opened the 10:15 or 10:30ish candle. That's really kind of where the rocket ship happened. In the overnight, we had an area of selling coming in right. Actually, it's right there. There's your explosion candle. So you can see it was also in an area where we were going to set up. Depending on how you drew this, you could have potentially drawn it just a little bit higher. We had a level sitting right there. You can see that you know, this was an area we were looking for sells. It wasn't quite as clean as the NQ, and I think, or it wasn't as ES. NQ is in a particularly vulnerable spot right now. It is technically the strongest right now. But, and I say but, okay? NQ, I think, is in a very interesting place right now because major tech companies have, they've tried to pull back sales and they said, we're not going to sell, we're not going to sell. And there's been chip things. We're hearing a lot about semiconductors and a lot of tech based conversations about these are the sanctions we're going to be able to put on. And on the flip side, we're hearing a lot about what cyber warfare looks like, that's going to be our next battlefront, that's how it started in Ukraine, and we can start expecting to see it as well here. I think NQ is at risk. Right now, it is finding some buyers, and again, it found buyers at 14,000. We know that's a psychological level, right? It was really kind of our downside target, but not necessarily the weakest of all of them. If we do start to get any type of a rally, NQ seems to be the fastest. It's been that way for the last 2 years. So again, look for reversals there in NQ. YM, YM also yesterday we talked about the 39. Actually, this one early at 2 o'clock this morning, and again we don't typically trade off 2 o'clock candles. You can see it's at the top. It had that failure to go any higher in there. It grabbed it and it was all the way down. We kind of stabilized here, and again the peak here was at 9:30. It was reaching up to go short, but unfortunately there wasn't a zone there in the overnight, and just continued to collapse down again. YM is at the highest risk. How I said the NQ, I believe, is the most exposed. YM is in a difficult situation with oil spiking. Okay. The reason why is because it's the Dow Jones Industrial Average. Shipping and transportation are definitely something that have, I don't want to say it's not the most dominant factor, but it's a very, very large factor. Okay. Gas prices go up, transportation costs go higher. The Dow Jones tends to be the one that gets reacted the most, or that has the most exposure to it. That's why we're seeing this as the weakest of all the indices today. Now, we did mention there was an area down here at 33.22, and you can see that it's already hit that level once, twice, and it actually came in and based in here and started to push a little bit higher. So, am I willing to take this one long? No. Why? Because we were already short, and this would have been your profit target. The question is, has this put the bottom in? Are we able to draw? Again, our thinking was that we needed to hit this as being a profit because we came off the top side, right? Question is now, if it's the bottom end, are we established with somewhat of a zone right here? If we can get a little bit of a space, could this be a potential reversal back for the day? And maybe, maybe, if we're drawing some fibs on this one, right? You can see that people are going to be looking for this one to kind of retrace a bit, potentially on the 23.6. So if it pulls up just a little bit more, that gives us plenty of room for a base and then a pullback back down again. And then we know the 50 is not sitting up until here. So, I mean, if you're playing the standard retracement of, hey, we're going to bounce off of this and then we're going to retrace to the 50, we're kind of right in the wheelhouse of that one coming back down again. So the zone may be in. Like I said, I don't have a crystal ball, but I just know if we get up in base a little bit, could we potentially have an end of the day rally? Sure. Sure. What form could that come in? It could come in some type of a headline about they've agreed to a temporary ceasefire, or you know what, we didn't come out with peace plans today, but we're going to talk tomorrow. But we feel like we're making progress. Something that's a little bit more positive could be that what we need for the end of the day. And remember, they're 7 hours or 6 hours in advance. I don't know how late in the night they're going, or if they're still talking, but I do know that those headlines, people are going to be trying to get that one done, and that could be a potential reversal. This is a lot of downward movement. It's 625 points on the day so far. You can see that the daily ATR, because of the increased volatility, we're up here at what, 750. So not quite a full day's worth of movement, but the historical average is typically about 380 to 400. Actually, probably even a little bit lower than that. It's about, I'd say, 2 to 300. So we're in some craziness right now. Is really what we're dealing with. But right now, again, I like to see any type of basing and pullback in here. We're looking for any type of a push down that doesn't go as high, and then again that establishes a risk level. And I would say, in particular, I would look for really kind of this 50, because that's what a lot of technical traders are going to look at. They're going to say, hey, 50%, 50 retracement. That's what we're looking for. And again, this is just hypothetical, guys. If you're looking for this as your level here, you need to make sure you have at least a 1 to 3. Your 1 to 3 comes in. Whoops, it's 1 4 right there. If I had to draw where my level was on fibs, I would say that there's probably a level sitting right there. So for me, if this is where we're going to get that kind of basing for a little bit and that bounce and pullback, I think it's a decent opportunity to go long. I would get out before you hit the 50, because again, there are sellers that were sitting right here in that zone. Question is, do you want to risk that little much right there to get in, to get up here and then risk all your profits? Yeah. Like I said, play it before the fib traders and the technical traders get in. The algos are going to love this 50% retracement because it's an easy high to low draw. Russell. Russell is the weakest. So we had this trade over here. We were looking for another area of basing. We really didn't get it in the overnight. We got to push much, much higher up top, right? We were calling for this to go higher here. You can see that it came down and kind of did a bit of a pullback. It really wasn't a great level. The basing was actually up here. We were waiting for the basing here. The basing actually occurred at this level, okay? Now, this is a drop, it's a base, and it kind of pulled back up again. Is it worth another shot up there? It wasn't the ideal opportunity, but the Russell is obviously going to be at risk as well. Higher oil prices, smaller businesses. Yeah, it's not the ideal situation for them. So we can make some adjustments on it. Let's see if there's yeah, you can see right now, the last time we've had a big spike, and this was over the weekend here, this gap down, the 1974. And now that we have kind of a new high to put in, you can see now with the new high, that level that we had drawn yesterday just happens to be coinciding with the 50. So right now, would I be willing to take this one long? And there's some, there's some buyers there, but again, this has been pretty clean. Impulse correction, impulse correction, impulse correction. Are we going to start the impulsive move? Probably. Is this a rock solid A plus level where buyers have confirmed that we're in? Not really. It's okay. It's okay. And again, with oil this way, as high as it is, I'd say the Russell is definitely at risk. So I'd be looking for a profit target right now down here at 1976. I would say that this is a level. Is it a decent reversal lever? Yeah. I mean, it was confirmed here, barely touched and supported it. And then this was the takeoff point. That would be the next level that I'd be looking for along, but I would absolutely look for a confirmation entry in it. I wouldn't just be like, hey, you know what? Here's my limit, or if it touches it, I'm going long. Nah, I'd be a little bit more careful with it. Again, depending on the time of day of when we hit. If it's a European session, we're bouncing off of it open. We could do it. We need something positive. We need kind of oil to get under control. We need some type of peace talks. We need something, right? We need some type of positive news. Could we use that level for tomorrow for some of the ADP numbers? Sure, absolutely. All those look great. So keep it there. Set yourself an alert. But right now, unfortunately, this is a little bit dependent upon what's going to happen. Is he going to weaponize oil? Is that what we're saying now? Or is this what we're looking for $150? 50. I mean, just think how bad gas prices are now. Could you imagine what gas prices are going to be when it's $150 per gallon, right? Or per barrel, right? A 41% increase. Whew. Take our gas, take a 41% increase over what our current gas prices are. Yeah. And remember, at $4, at like around, I think it's four. I want to say it's like 4 or 4.15 is where there's like last time when we had $4 gas, that was the statistical percentage of when it actually started to hurt the economy because people were not driving and the passes being priced down were causing problems. If we can break, I forget what it is. It's like 407, 415, somewhere around there. If we go up to 140, or 150 a barrel, we're definitely going to go above that price. And then we'll have 40-year high inflation and over $4 a gallon. It's like, man, this market is just doomed. So, yeah, lots of fun, right? Lots of fun. But again, remember, we can make money when the markets go up and when the markets money go when they go down. So this is why that the buying and holding is not always the best thing out there, right? You got to understand your ways to play the market. So let's go across. I already mentioned oil, where we're looking. I like these candles up top. I think this is decent. This could be where the top is. Again, we went a little bit higher, but this candle right here, that green, I actually really like that formation. And again, I love when there's no wick on the bottom of a zone. Could this be our potential? Sure, it absolutely could be. Absolutely could be. And if we look to see where that high is, looking at the 50 to see where a potential target could be, that's coming in right around the 98.60 level. And again, there was basing there with a nice little pop. I mean, if I was going to draw a zone, I would say, hey, listen, right there, it was a base, it popped, it pulled back, and then boom, it took off. That would be a pretty decent target for me. So we'll just take this one over here so I don't have to draw too much. If I had to target a downside position, and again, we didn't get it here, I would say that that's not bad. Again, this is that pullback, and we'll see if we're able to kind of, push any higher. But again, 106, nobody likes 106 gas. All the estimates have been kind of busted for the year, all those people that said 96. But yeah, I mean, it's there. This could be the top. I'd like the candle. I'd like to see it pull back a little bit more, and we'll see what we can get. And again, the fact that it comes up to the 50, People are going to be looking for that. But when oil turns, it looks like 98.75 is going to be a nice little target to the downside. So, yeah, not bad. I like it. Natural gas, obviously spiking. Now, natural gas, in reality, natural gas is more one of those things. This Harry Potter has not been completed yet. It's still live. We're waiting for this one to get an entry. This literally on the 30-minute. Remember, this is a 30-minute one. It literally spiked down and came back up. So we still don't have the entry. We're still waiting for this entry to kick in. Right? Is not triggered yet. We're close. We're close. The fact that it blew, the fact that it sliced through and didn't base in there, I love it. I love it. Just not ready yet. Natural gas is going to be an interesting one. Again, Russia supplies a lot of natural gas, particularly to Germany and the European Union. Are they the biggest power, the biggest force in natural gas? No. Is it easiest for them to get it to Europe? Yes. Could we supply it to them? Yes, of course we could. There are other methods to go. It's going to be a little bit more expensive. But with this, again, this is a seasonal thing as we're entering March now, too. The seasonal demand for natural gas is also going to go down a little bit. So there are a couple of factors with natural gas. Again, quite volatile. Looking for this one to drop. And again, if they say that we're not going to, I originally said, what happens to the Ukraine biz? You're not going to protect me? Great. You're not allowed to pass energy through the Ukraine anymore. But now that the Ukraine is like, no, we're going to join the EU. We're one nation, right? We'll be stronger with you. They're obviously not going to cut that off for their trading partners, right? So then it becomes more of a Russia's going to cut it off type scenario. So, it's still at 4% today. I think it's probably due for a bit of a roll. Going into gold. And again, remember, we're covering commodities first before forex today, just because oil is such a big deal. So we got plenty of pullbacks here. There's been a great couple of trades in gold. I'm going to delete these just to kind of clean it up at this point. But again, there was a nice short there, nice little spike here. Overall, this was kind of our most recent high to low. Starting from that big drop down and that gap up again. You can see that it did kind of blow through, it gapped above and pulled. The thing about this one that I'm looking right now is there's not really a whole lot from the 61.8 up to the 78.6. There's not a lot there. Price action wise, there's no price action. It literally is just a big drop. There is going to be a small zone sitting up here, right? So, sitting right there. But you can see how much room we have to run. The price of that right now is up here at 19. Let's do this. 1962, right? We're at 1933, so it looks like we have more room. Gold is in a very interesting spot, okay? If we decide to be cautious with our interest rate rise, which is it's definitely raising, right? It's raising to crush inflation, which again is a gold negative event, right? They rise, gold goes down. The market believes that it's going to be a 0.5. If it's only a 0.25 because of asterisk Ukraine situation, Russian invasion, yada yada yada, that is a big boom for gold. That could be an amazing opportunity to go long. So I'd like to kind of see where we are, what comments come out of Powell on Thursday. I think that's going to be the ultimate day to play gold. Right now, we're kind of going in that middle range, that middle 33% of kind of the top and bottom of the most recent highs and lows. We're kind of in no man's land. But if we start approaching these high, like 1960s, I guess not high, it's like kind of, mid to mid upper 1900s. I'd say we got to start looking to get short. Right now, I would be a bull in gold. I think everything that we're seeing, again, it's justified. Gold has an industrial purpose as well. Again, with oil being drugged forward, a lot of the commodities move as well. But 1.63 up $25 today. I think this is pretty decent. Silver. So silver has taken off as well. Again, we talked about that 24. It came down there yesterday and really kind of based. And then all of a sudden at 1 o'clock this morning, it started to take off. And it kind of went lockstep with gold. Gold's up 1.38%. Silver is typically double. It's up 3.31%, a little bit more volatile. Big question I have is we do have up here around 25.45, right? We do have a level. They tried to test it. It didn't quite get hit, but that was the most recent high. Today's a big day up. Let's see. What is the daily? Daily ATR, and again, the daily ATR is spiking right now, but it's about 64 cents. We're at 80 cents now, so we're at, not quite 1.5, but it is definitely outside the curve, right? Outside of the, the normal day, right? Typically, when we have that in silver, the next day tends to be kind of a reversal. So we are getting up to an area where I'd say, hey, you know what? 3.3% is a lot. Could it go 2 days in a row? Sure, it could. But a lot of times when you have these big parabolic moves up in one day, you typically look for somewhat of a reversal, right? So there's a couple different factors involved with it. I'd say right now, I mean, we get up, we start basing this level. There could be a great short opportunity. And again, I would say probably play this more. I think when Powell testifies, I think it'll be a great, that'll be a great market mover for it. Besides it, right now, this is kind of this is a commodity story right now. But I'd be looking for a top. It's not here yet. If we can, go through and actually break through this level, which we haven't done yet, we know we got sellers up at 26.05. So silver is a very interesting play for the rest of the week. Let's talk about the currencies now. So yesterday, last night, let's see, where is it? Right here. I was talking about getting long. I drew this one in yellow, saying we'll see what this one does. This could be a potential area for us for news. You can see that the level of basing actually was right here. Right there is your level of basing. There is your news event. So I talked about getting long last night for the Aussie. Okay. They didn't raise the rates, but I said any of the language that they use that is somewhat hawkish, look for that to go long, right? We were using the 27 if, again, the 27 was designed in case we'd already pushed through before news. It didn't. It pulled back. It gave us that telltale sign. It was definitely a 1 to 3. I'm not going to draw it. It was definitely a 1 to 3. So this needed to be pushed higher. This was our profit target to take us out. So that became our new level of basing, and you can see strong move, miss a decent run from that news event. That was about 43 pips in a couple hours. Then we had the reversal, and then the failure to go lower. And it's just all it's done is push us right back to where the news is. So now we're at a basing level. Again, we've seen dollar strength today. We've seen this one pull back a little bit. I would say I'm probably right now more in kind of the camp of if we can get some additional basing, look for, again, a special, that kind of confirmation pattern down. We have some room to run. There's a few little hiccups here to the downside. But overall, again, we were playing news. We wanted to get long, we wanted to get long also before the news. It would give us a 40-something pip drop, or 40 pip pop. It's brought us, it's retraced all the way back again. And now I would say look for this to continue to deteriorate. The US dollar will be a little bit more insulated. But for the most part, this one is pretty tame. Aussie dollar has moved 3 pips in 24 hours. All its upward movement was retraced back over in the night. But I would look for this one probably short back down into 71.80. Aussie yen. Aussie yen. It pulled back. Now, was this one as clean of a pullback? Nah, about an hour beforehand, it really kind of came down and it grabbed the level. It wasn't ideal. And again, the 83, 85 is really kind of where we're looking to get short. This is one of those alerts. You guys remember we set this one yesterday. It's pushed down. I think this one is officially out now. Let's see. I believe it is officially out. Yep, right there. There's your 1 to 3. So yeah, it's officially out. I didn't check this one before our 8:30 today. But yeah, our 1 to 3 is out. So again, we were looking for the pop with good news. And the good news was they didn't raise rates, but the language that they used was enough that we needed for it to go higher. News drove it up into a zone in the 30-minute, and that's what gave us the reversal push it back down. So right now we're kind of smack in the middle between the two zones. I like the 83.85. I think that's good for one more short. The 82.77 on the downside. Like that one also. But right now we're literally sitting kind of at a small level, almost at a 50% mark, right? If we take our fibs and we draw it, we're probably sitting, yeah, look, we're fluctuating right in. There was nothing really at the 50, but the 61.8 is where this little hiccup is. So you want to take it for reversal? Great. Take it. But I think this one, for me, I'm kind of waiting until we get to one of the two extremes again, because we just finished the trade out, and that's where your profit target should have been, kind of wedged in between that 50 and 61.8. All right. Euro pound. So euro pound's in an interesting spot. We talked about a break yesterday, right? We're looking for some basing in there, and it kind of chopped around, and we're kind of playing with that area as well. Right now, I mean, this is a hard one to play. In 24 hours, it's moved minus 14 pips. You can see in the last hour, it's been doing all the retracing. So you can see it was really just grind, pop, grind. And then really from 9 o'clock this morning when the U.S. trader got involved, it's pulling back up again. But if we had to, kind of shrink this entire level of basing here has been a big deal, right? We know we don't have a lot of clean entries. That's why we didn't have anything drawn on here. We got one kind of spike down. We're looking for profit targets to come down in this 83.14. And you can see it missed it by just a little tiny bit. This one really doesn't have a lot of directions. They're kind of following each other in kind of mirror step, right? It's down 0.15%. Not really a lot of trading opportunity. Like I said, I'd be using this more for kind of a proxy. And by what I mean by a proxy on this one, if we're in the current strong euro phase, and we're a little bit weaker in the pound, then again we play that against the dollar when the dollar starts to reverse. Okay, but right now, really nothing tradable in the euro pound. Euro yen on the other hand, you can see that euro yen. This one we had this long, right? The long expired, right? And then it hit it again. So we had our one, we had our two, we had our three, and four actually held. But you guys know we're not getting long after, after hit number three. So again, there's your parabolic move. This was your entry. There was your parabolic retracement trade. We weren't entering the position again, right? Because there's one, two, and this is three. There's four. Number five is what sliced through. So again, nice little Harry Potter trade all the way back down to the level we had marked lower, 127.52. And I do think that this one is probably set up for more of a reversal. This was from a level all the way over here. We were looking for an alert on it. Um, right now, I would say, again, look for some from Euro strength coming back in. Do I think we're going to retrace all the way back up? Probably not. But at this point, with this trade out and over, we know we have basing. Let's adjust the base a little bit to this level. I would say, if we can get a decent base here, it could potentially move back up. I think we get back up to the 128.80 before the end of the week. And look at this. This has been a targeted downside. Look at this. Front run, base above, chop, chop, base, test, and then drop. So, yeah, we don't need that level. We have this one up top we can use. So, right now, I would say look for a reversal in the euro yen. Don't really necessarily have a great setup on it. Let me see if fib-wise, if this is the bottom, is there anything that matches up? Yeah, look at that. If this is the bottom, that basing level we just drew just also happens to be right at 50%. So, always nice to draw those. And it's always funny when that works out where it's exactly where we want it to be. And we knew that this one, again, this was a great Harry Potter short, but it was an early morning short. You guys had to be up at 5 o'clock in the morning to be able to take it. Euro dollar. So, Euro dollar, we were looking to get short. Didn't quite make it all the way up. If you've used the new top here, right, you would have gotten in. Whoops. Move that there. You would have got an entry, and that was a 3 o'clock open. So, for those of you that are London Open traders, this is definitely one of the ones you should have got into. It was a nice mover from that London Open. 142 pips to the downside from that setup. I was not awake at that time. I missed it. I didn't trade it. I had an alert sitting much, much higher. I sometimes will sleep through an alert. I 100% of the time sleep through when the alert doesn't, trigger. So this one didn't trigger for me. I didn't mark this one off. I was actually already asleep last night by 11. So I didn't have this one marked off, but if you did use that one when it pulled back again, great opening trade setup. And I think a couple of my students were able to get that one. I was looking for this one to come down and do some basing off of 110.82. I think we still have a little bit more room to run in it. But I do think that this one, just like the euro yen, I do think that this one turns and we start rolling up. Whether or not that's the bottom or not, I don't know. But right now, we do have at least one bottom. If we start to base sideways, I think this reverses. All it is going to be a reversal of the move we've seen today. Like I said, from basically in just the European session, not even the high from the 11 o'clock last night, you can see that it's 141 pips. Okay. The daily ATR on this one with the spike is 90. The normal kind of average is about 60, right? If I take the most recent spike out, the last couple of days, it's been like 70 pips. So we are basically at 2 times our daily ATR right now, right? Those tend to reverse. So I'd be looking for a way to get into this one again as profit taking comes in, and we see the money go back to the euro and come out of the dollar. All right. Whether we hit it a little bit lower, we may or may not. Pound yen. There's our Harry Potter trade. How about that as far as a Harry Potter? We talk about basing in there. We push through. We push through. We push through lower again. So again, 1, 2. There's your 3. There's your test 4, and number 5. Magic all the way back down. Retrace it all the way back to and it's funny. We used this forecast the other day to forecast the 50%, and look what it just came to. Right. So kind of the same deal. I think we will be finding a bottom down here also at some point. Question is, let's see. We'll just bring this across because again, it's the same draw. Yeah, I'd probably use that same 50. So I wouldn't use this level again, but I'd bring this up here as far as a clean entry goes, a 154.94. That Harry Potter is out. We can leave this one here because that's nice to know. And again, we're in a basing area, so we're just going to leave that. Let's see if we get much more destruction. There may actually be another short in here. Let's pull that up. Let's see. Gonna have to put an alert on this one, I think. Really, it should be there. We'll see if that's a new base level. This potentially may be an entry for another one. I'd like to see how it goes down. It's going to probably have to move down to a little bit lower, probably move down into this 152.73 range to base and then pull back up. But it's an old Harry Potter level that we had drawn over here that we had pushed a zone to the brink. And now that we're in it and basing again, this one actually could be another continued short. But there was already one today. Look for number two. And again, pound yen has been quite a mover today. Pound dollar. Here's a trade that we had on from yesterday, right? The 134.24. We came up and touched it. We opened up today at 3 o'clock. Again, European session trade. This one was, again, pretty easy. We had basing, we had touching. We had touching yesterday at 9:30 in the morning. So if you were still short from yesterday, you were officially out of the position now. And we got grabbed by the buyers here. I'm not really looking for long in this one until 132.46. We had that a bit of a gap down, so we know that we have buyers in this area. Maybe this could potentially, by the way that the candle formed, I love that there was no wick on the top of that candle, right, on that red candle, like that. That's some of my favorite candle formations. We'll see how far we're able to pull away again, but I think you could potentially look at 134. It has hit it one, two, really kind of three times now, four times. So it's not as good, but it still hasn't hit the 50. So there will still be algorithms trying to front run that 50% retracement. Okay. Dollar CAD. See, look at this one, right? And you say, wait a second. You've said it multiple times, right? The CAD is a proxy for oil, right? I don't understand. Oil is way up here. Why is this one not way down here, right? Right now it is decoupled. Okay. This happens with gold sometimes. It also happens sometimes with oil. Now, is it great for the Canadian economy that oil is this high? Yes, it absolutely is. Why? Because we are absolutely in the United States going to buy every single bit of oil we can potentially get from Canada. We will take all of it, right? It's a very secure source for us. Eventually, it will recouple. So, I think once we start seeing kind of the profit taking in the dollar and people are not going to the dollar as much, I think that this one starts to accelerate to the downside. Okay. With today's movement, we know we had a zone there. We talked about the zone before. We had based in it before. You can see we hit it. We kind of based in it and kind of came and hit it again. Love that it hit because it ate up buyers. Love that it based in here. It ate up more buyers. Love that it hit it again. It ate up more buyers. Okay. Every time it hits this level, it's going to eat more and more and more and more. And you guys can see I have the red dotted line. I have an alert set at 126.48, really that 126.50 area. When it breaks it again, I'm looking to see what it's doing. I'm looking to take a short, and I'm looking to grab 30-something pips to the downside, maybe potentially even more. All the factors are there, right? They show God forbid, they show any weakness about raising interest rates. That's going to weaken the dollar a lot. There's a lot of fundamental reasons why this one is looking to be a short. Now, currently, right now, if you wanted to run some fibs on this one and kind of look to see kind of what people are looking for, you can see there is a small level up here. I don't really necessarily love the level. I like the one at the 61.8 better, but we're kind of seeing it. There's been a big push off of there. The dollar is kind of getting to a point where we should start seeing some profit taking and turning. So again, it is kind of set up on fundamental reasons as well as technical reasons of why this one should reverse. But again, for those of you that don't know, I'm an if this then that trader. That's why I had these alerts set. If this one breaks through, yeah, I'm looking to go short. I may even look to get short up here, depending on how we base and what's going on with it. Okay. And again, with the API number coming out later today, if it's an API that shows a big surplus again, could that lead this to start going down potentially? Or what if it's a big down draw now? Either one of them really could affect it, right? So I think it'll be interesting. Dollar Swiss has been one that's been fun to play. Okay, so Dollar Smith had a small Dollar Swiss. This is one of my students' trades. This short yesterday. So we talked about 91.60 being a target. You can say it came down and tagged the target. It even based in the target. And it pulled back. It just didn't give us the entry off that level. So we were kind of looking for that to be a profit target, potential reversal. It ended up working out well. When I say well, about 46 pips. Okay. It's decent. I would say, again, I'm going to take these old fibs off at this point and let's run them from the top now because that's going to be what people are looking for. We're going to run them from there. So with that said, right now the 50 does nothing for me, right? It's in the middle of a long-bodied kind of candle. Not concerned about that. There is this level here, and I think this is a little bit better of a level. It is kind of in there. Again, a lot of people use the 50 as entry, 61 as their stop loss, just to give themselves a set of rules. And you can see that this zone is in that range. So that could be a potential reversal level. It needs to move about another 32 pips, so it's about one daily ATR. It's not a horrible trade. It's not horrible. Um, Particularly if we're going to use kind of this top and bottom right now, right? If we're going to use this as our top and use this as kind of our bottom, and again, I'd be very cautious taking another buy out of it. I don't even want to turn it green, but right now using this to be kind of our defined channel, that's a decent pullback. And again, very very strong movement out of it. The zone is actually a little bit higher than that, but we're going to keep it simple there. All right, not bad, not bad. Um, Dollar yen. So dollar yen, I kind of drew this pattern. I was looking for a base and I was looking for a pullback. It ended up giving us the base below it, like it was supposed to, and then it dropped, and then it came back up and grabbed it and went lower. So we were looking for this to pull down. We talked about 114.75 to being the target. It came down to 114.71.7. So it went just past our profit target from yesterday. I do think that this one continues to go lower. I think we do come back, and I think the testing will occur back down here. And again, this would be our next profit target if you were short. 114.48. I think that's a decent level to bounce off of. It's a two candle base. It's decent, right? It's decent. Not like an A plus, triple A rated, awesome buy area, right? It's not bad. But we got to chunk through right now. We're having issues in chunking through here, but we pulled a profit target from the top of this candle, and that's exactly what it bounced off of by 4 pips. I think we need to. The basing here is good. It's getting sellers to kind of push through this level of buyers. I think look for it to come down and look for any type of a bounce. All right. Other things that are out there as well. Bitcoin, we talked about 45,000 being a large psychological level for any of you Bitcoin traders out there. I think this is a decent level as well. Check this area out. I like the top. I like the fact that it's a large psychological level. It is kind of stuck right now in this level of basing. What I would do with that, if this was any other chart, I was like, hey, wait a second, we're basing in here. We got a little bit of a pop. Ooh, if it breaks through that, look to go short, right? Look for something to come down when it finally breaks that level. And again, a couple different fundamental reasons why, but I would say that, yeah, this is a big pop in a day. Look for this to, potentially turn and roll back down again. And again, I think Powell mentioned a little bit, but cryptos are not necessarily Powell's forte. Kind of the same thing here. I see a lot of basing, right? A lot of basing right in there. And I see one little pop there. I see some basing right here. And then I see another parabolic move right there. So again, for you, crypto traders, if this was any other chart, this is exactly the same way I would trade it. A lot of room to run. Bonds also, and I'm going to end it here on. Actually, I guess Dogecoin is down a little bit. You can see it's stuck in basing, but bonds, interesting enough, had a big spike up, and they're starting to push back down again. So this is showing you that we have some movement and rollover in the dollar. Pretty interesting stuff going on. As I said, a lot of news out there. You got to kind of click this, and Poland joins Hungary in warning about currency interventions. Interventions is something that is pretty common practice, right? For central banks, particularly when you need to control interest rates and when things are crashing and spiking. Japan does it all the time. They're the ones that are most notorious for intervening. That's extremely important for them. So again, headlines about this is it could be weaker. Yeah, headlines about interventions are almost like an interest rate change. So we'll see how it irons out today. With that said, that is it for today. If you guys have any questions, again, make sure you mark your calendars off for next week, Tuesday, March 8th. If you have any questions, support at keeptradingsimple.com. I would say right now, guys, the biggest risk right now out there is going to be the headlines coming out of the Ukraine. They are meeting for peace, but both sides aren't really meeting. I think our next biggest risk is when one of the two major cities drops. We know that there's 40 miles of armor right outside the city. Is it probably likely? Yeah. Urban environment fighting, they did say, is very different and very difficult for both sides. They said, we've been fighting in wide open fields, so we don't lose as much armor. So it's not fair to say, well, Russians must be bad. Urban fighting that you can't see who, there's a lot of stuff to dump into. So we'll see. Hopefully the casualties will stop. Hopefully they get this peace back on order, ceasefire tomorrow. Be great for the markets. But with that said, you guys stay safe in the markets, and we'll catch you guys next week. Take care.